Going live. Let's just fix this first.
Hello, hello.
Oh, now I've got Brave. I gotta share. I was sharing Opera earlier, and so
Can you hear
now
me?
my Brave. Yes, I can. Can you hear me?
Good. Yep.
Yep. There we go. Okay. Silver. Another big jump. We usually see the price. I'm just jumping right. I'm just jumping right into it, like the price of silver this morning, where from close to the open. Oh no, it's like literally from that wasn't even closed to open. Look at that. That was at the close of the noon hour on Friday. Is that right? Nope, Friday. That's right. Yep. Market close to the market open on Monday. That jump there, we see that every once in a while, and it indicates we're heading up for a while. It indicates we're going to continue in that direction. So yeah, that was yeah, that's right. Monday open. Already creating new highs again today. It just keeps going. Gold. Also, look at that. Since analysis yesterday. Another new high. Oh, yeah. Boy, does that ever feel good. Man, does it ever feel good to be so right. Which also means that this chart here could use some adjusting, probably. I'll have to do that math later on. But gold continuing to rise will mean that it's less gold to buy this. You know what? Actually, it's not too far. Let me get a calculator. Oh, this phone doesn't have a calculator. All right, let's bring this down here first. So we got, this is what I like about trading view, is that I can bring this open and I can open up the numbers sometimes. All right, here we go. Where is it? Gold, 47.60 is, oh, wait, I need to do the US 30 first. The 48,600, well, put it 700 because we're jumping around, divided by 47.62. 10.22. There we go. So that's dropping fast. It dropped almost another 10%, you know? Is that right? No, not 10%, 1%. Dropped another 1%. Bitcoin against gold. Look at that. It's getting cheaper. So Bitcoin is, even though Bitcoin is, going to go crazy and the market structure shows that it's going up, right? We see the trend. Where is the price? There it is. Like we see it going up, it's creating new highs, right? Look, it's recovering. Yay, that's the floor. We've got this, everybody. Meanwhile, No, it's actually losing value. I always like looking at things contrarian. Bitcoin dominance still butting up against 60. Yeah, it's at a
It's a good way
these are
to look
crucial
at things
levels.
contrarian.
Yeah, yeah. I think that's what gives us a little bit more success is because we're not falling into whatever the masses are doing, which is always just giving away their money. So, yep. Blessed are you who are persecuted for righteousness' sake. Let's move on. We got night. Still at pretty good lows, but over the last, what is this? Yeah, just since Sunday, that impulse here, this last retracement looks like it's already coming back from that low. We'll see. We need it. We really won't know for sure unless we create a new high whether or not we're creating a trend because we need that D extension to know for sure. But this is market structure, and this is a healthy support line. We do have that trend line coming down as well. If we were to zoom out a little bit, let's go to the 4-hour chart. Yeah, we can see that market structure will probably provide some support. There's the pivot point. So it'll be interesting to see as that narrows down. We always see an increase of energy the further it gets to the point. So that's something to be mindful of. The longer it goes, the larger of an impulse there usually is. What does an impulse look like? Wow, it's just such a brand new coin. Who knows? It's really going to coincide. Like, even if it goes below, I think we're just going to continue to see dwindling. Take a look at Polygon, for example. It's on the daily chart. It's just still kind of dwindling. This might indicate something. I like that. I like this movement. It's kind of like Monero. I like seeing that kind of thing. It's good to see there's money coming in. But I mean, we're all red today, and pretty red too. Down 16% on some of these. Destra, 7% down even on BitTensor, right? So when I see when we have the price going below, where did night go? There it is. When we have the price going down below these kinds of pennants, it's usually just a dwindling. It doesn't mean it's really trending. It's just kind of like fizzling out because the volume just drops, right? Dollar cost average. Where is D anyways on Cardano, right? Right now, on a short-term basis, remember, most of the money is made in recovery. So I'm going to do for people who are kind of interested, I've got some of the ladies in the Dragon Riders who are they're kind of asking like, well, short term, what can I do? Well, here's a good one. Oh, and I think Ian, you had mentioned that too earlier this week. This here is beautiful retracement. Now, we have a Wyckoff pattern here. So this is actually a nice opportunity to buy because we're close. We're really close to market structure. The likelihood is this way. When we take our odds, that's the way to go. And so what we do is that we plot out our lines. And now I've already got pivot points here. But what we want to do is that we want to start planning for this exit. Remember, it doesn't mean much if you know when to get in. It doesn't mean much if you don't know when to get out. So from here, if you wanted to get the most out of a small trade here, say $50, take it, oops, and aim for the recovery. Well, the retracement is present. We already see that. Where's my ruler? So the retracement is all the way from this high. That's the most previous high. That's the market structure. Everything below that is consolidating. So this is nice and deep. Just take it to recovery. In fact, don't even bother going right to the top. Just take this a bit right here. Stop here, or even maybe this pivot point here. Mark it, fit 41 cents. And all you're going to do is that you're just going to do that. Why? Because that $50 is going to go up 18%. So now you got, what is that, 69. And then it's like, okay, yeah, but what if it goes down? Well, that's why you don't put it all in. That's why you only put in half. Because when it goes down, you buy it again. You do the other half. Because you're deeper into the retracement. Now, at this point here, we're close enough that yeah, I wouldn't do that. I would keep it like that. The time to do that would have been here, for sure. Yeah, this line. Dollar cost average. Get some more volume the deeper into the retracement. Now, let's say, for instance, together, let's say it had averaged out to $100. You know, the short term, very real, 4 days, this 1 week, that $50 could make an extra $10 for you. Now, people say, oh, but that's not life changing money. Excuse me? Oh, you're thinking in dollars. You have to think in points, remember? 20%. You show me a bank account that will give you 20% across 5 years, and I would be impressed. That's a nice short-term trade. Me, because I figured way back here, beginning. Oh no, it was here. And where was that? It was September. It's beginning of September. Yeah, yeah, that's right. That's right. That was the big one where it was like, oh, yeah. Back beginning of September is when I told Audrey Lynn, okay, I'm cutting loose 50% of my ADA right now. And she's like, me too. Yeah, and that was great because sure, we panicked right after, like, we should have left it in there. It went back up, but we were patient. And sure enough, we bought again, like down in here, 63 cents. So we got it 30% off. That 50% that we had, we increased the size of that bag by 30%. And I should have kept it longer. In fact, I should have sold more, but it's okay. I've been buying. This is going to be insane. The retracement that we're on. Look at how deep we are in this little tiny ABCD. We're way down here. Remember how I said the long term, the longer time frames govern the shorter time frames, right? So I'm even more excited about this little tiny window that I've zoomed in on the 2 hour chart. I zoomed in. Now back out. I can even go to the weekly chart and I can show it's just how. Yeah, we've got a trend here. That ABCD is a trend. This is
Now,
market
what about
structure.
moving? What about moving your ABCD, the one where the A is in 2024? What about moving that ahead now to where the
Yeah, like so.
yep?
Yep. Let's just put it there for now. I want to keep those. Just the micro to the macro. That's what we're doing here. And this is how you really start to optimize your stuff. Because I'm trading on this chart here, I'm using the more zoomed in data, right? I wouldn't follow the Wyckoff theory on a daily chart nearly as religiously in a technical analysis. This here, 2 hour chart, oh yeah, you better believe it. I'm going to put more weight to that Wyckoff on this particular trade simply because I've got the daily market structure on my side. I am deep into retracement. All I have from here, all I have from this point here to B, people are like, woohoo, I'm going to get 50%, 20%, going to get $10 from that. Let's say it's $100 in total, 20%. Now you got a $20. Yeah, but you're just counting this recovery. I'm going to show you how that $100 now, this 120, you're going to take profit. You're going to take profit on half, just half. Take 50% profit when it gets to recovery because it'll come back down. It'll retest lows probably around here. This is where you'll start to dollar cost average at 40 cents. Coming back down, you'll dollar cost average. Why? You're going to take that 50% and dollar cost average back into the market. So now 50% of your account is going to be coming in at, say, 5% off, 6% off. There you go. That way, you can catch the next movement. And you just do that over and over and over and over and over and over and over again. And there are people who've taken on that challenge in Forex. You start off with $100. How much can you make $100 go? And there are people who do $10,000 in 6 months because that's how you do it. And sometimes I think to myself, what did I do wasting all my time with trying to help people see the importance of digital IDs and creating their own? Why did I waste all my time on that? Why didn't I do something that made me money? I don't know. Beautiful. This is recovery, folks. Where we're at right now on the macro, that's recovery, 255%. So that's how you get from here to 255%. Compound that 15 to 20%. Because remember, you're adding to the bag every single time you do another wiggly squiggly line up the ladder. Because you're just looking. You're just looking. Oh, that's a retracement. Start dollar cost averaging. Down deep into the retracement. Sell 50% when I get back to through recovery. Don't invest in accumulation ever. You're dooming yourself. Don't ever invest into accumulation. Appreciate accumulation. That's what the other 50% is for. It's to continue appreciating. And then you're always just taking 50%.
Can you define what you mean by don't invest in accumulation?
Yeah. Let's go to gold. This is where I have some boxes that are nice and easy to see. So in every market, there are periods of trends. We have declining, and that's where we are bearish for a long time. We have recovery, and that brings us back to the start of the decline. And then here we have consolidation. Everything after this is called accumulation. So you don't want to invest in accumulation. You want to appreciate it. And so now in this case here, it's a different story because this is the reset. But that's what I mean when we're looking at some of these other charts, like ADA, for example. When we're going back into bull mode, and this becomes alt season. I am going to be following this very closely, but I will only be taking profit. I'll only be, which means I'm only going to be putting money in during the retracement, during the decline. That is my cue to put money in. It's kind of like, remember how that ATR thing works, right? It creates a new high as the ATR dies down. That tells me that that volatility is retracing, it's coming back. That's when I know to buy or sell, depending on the trend, right? Knowing that we're going into bull mode, I'm just going to buy down here and I'm going to take profit here. So you see, I would have made double dipped. I would have double dipped this B to C. Yeah, if I was paying attention, I would have I would have double dipped where I was buying here because I dollar cost average, right? Oh, look, we came back down to this area. I'm going to buy with the intention of buying even more down here because this is a retracement. We're coming back to find support. So I would have bought here and then I would have sold again before it even went down. Why? Because it came up to this area, this pivot point. When I mark these down, when I'm doing trading, these are my entries and exits. These pivot points are my entries and exits. So I can always just be like, oh, this is when I'm selling. Oh, this is when I'm buying. This is when I'm closing. Whatever it is that I'm doing, I'm setting these pivot points as my destinations, my markers, my decision points. So this coming down, I would have bought and I would have sold here, and then it would have come down, I would have bought again, and it wouldn't have taken profit, but that's okay because I would have bought again, and I'll sell again here, and I will appreciate the accumulation. Does that help encapsulate that?
Yeah, I think so. When you said you will sell again there at the,
Yep.
if you right there, you're going to sell again there,
I will sell again after we recover. Every recovery, I sell.
not the whole package, just a certain
Just
amount.
just the 50%. So
And
my
you let the
balance, oh,
rest of the 50 ride, you
yeah,
let
this
the
is
rest of the
actually a
50% ride up, eh?
yeah,
Yep.
that's right. This is actually a really important principle that I sometimes overlook, and I want to just bring it up here. Oh, and look at what I was working on this too. Okay, so let's use the $100 example. So market is doing its thing, and it comes in, and I'm already seeing, oh, I'm in accumulation, so I'm not going to buy, not going to buy, not going to buy, because I want to know that I'm not going to get this, right? So I wait until I see that retracement, official retracement, and I buy at levels going back to support. Buy to support, I call it. When it goes back up again, I'm selling 50% here. So that 100 goes up to 120 now because I made some money back up to recovery. So that 120 now gets split. 60 stays as ADA. 60 goes as CAD or probably, well, yeah, I'll go USD. Sorry. Yeah, so 60 USD, 60 USD worth of ADA, right? I hope I make that. Does it make that sense? Hope that makes sense.
Yep.
So now that 60 USD sits Now that continues, the price continues. I'm not going in because that's against my rules. This is accumulation, so I'm not buying. I'm waiting for what? A retracement. And then I start taking this 50%. But now it's less than 50% because I've already got some more appreciation from my $60 worth of ADA. Now this is up, right? Now it's 75. Yeah, let's go 75. Now it's 75 ADA. Let's properly do this. I've got a chalkboard for crying out loud. So now I got $75 worth of ADA, and now the price is coming down. As it comes down, there's going to be a point where I will see, oh yeah, we don't have support. It's going down. We're gonna probably go like this. I'm gonna go ahead and set out my dollar cost average to the most recent support, to the next pivot point. So now I've taken this 60 USD and I have accumulated plus 30% or 15%, let's say. What's math? What's going to be easy math here? Let's go 20. So now I've accumulated 20% more ADA as the price has come down. And then I sell when I get to recovery, 50% again. And this is where the compounding really starts to take off. Because if you think about it, I am compounding approximately 10% every trade.
So do you focus on the dollar value or the amount of coin that you have?
I focus on percentages. The
Okay.
percentages are way more important to me than the value of the asset. In fact, the value of the asset is it's irrelevant.
Yeah, but you're talking about percentage of the asset though, right?
No, I'm saying percentage of the price action. I'm looking at the how much in percents, how many points does it move in a trend?
Okay, I got you. So your percentage is against the price action, not against the
That's right.
volume of coin that you have.
Yeah,
Okay.
that's a good way to put it. Yeah, because my interest is in this ruler. Like, what's this? Well, look at that's 33%. And that's not even recovery. Because recovery is up here. So 33%, just that little bit, I can definitely go ahead and take and sell half. I don't always get it. No one really ever gets it. So I just measure between pivot points because those are where I'm taking my choices, right? That's where I'm making executions. So I measure between pivot points when I'm doing budgeting. So there's
Mm.
22%. That I'm more interested in this than the value of whatever the thing is. I couldn't care less about the value until it's time to actually bring money home. This is the number. This is the metric. Why? Because that gives me an idea and data on what kind of a retracement do we get. And on average, what are the distances between the highs and the lows? Not in amounts, in points. On average. Oh, it's 22% on average, it goes up. Oh, no, it's 8% downwards, and I get those averages. And now you can just mathematically, because after that, the game is 100%. This is another thing about trading a lot of people don't get. The the only way that you're ever going to be successful, truly successful, is risk management. This is the number one principle. I wish that this was the first thing people were taught when they took trade when those courses are out there for trading. I wish this was lesson number one. If you have a win rate, that's the first parameter you need. First is a win rate. Okay, what's our success rate here? That gives you one parameter. Another parameter that you're going to be finding as you play is you're going to have another parameter of profit ratio. So the ratio is, oh, you are putting in like the amount that you're risking, you're gaining this. So you have a win rate which could be 50-50. But with money management, you can have a nice ratio where you're making 30% every trade. This here, if you optimize these two things, you can make unlimited amounts of money. Because this here, let's say it's 60-40. 60-40 means that now I can risk more. Why? Because I'm going to win 60% of the time. And so now I can optimize my risk, and again, this is not like this is something you have to analyze on every single asset individually, but this is the path. If this is my win to loss ratio, I can risk more because when I win, I pay for more losses. Huh. The cost of doing business might just go down if I risk more over time, especially if I can maintain this kind of a thing. If it's 50-50, I can still do it, but I'm going to have to risk less. But if my math is good, I can risk more. This is great. You can compound yourself just by doing that. But if you are doing a win to risk or a win to loss ratio and you can optimize this, whew, now you're compounding your leverage. So risk management is the ticket. That's the number one ticket because all you need are these two parameters. And then you can figure out what to risk, to optimize that.
Can you put stuff like this in an algorithm?
Every time we do these transcripts, I tag the conversations in my folders. I
Sure.
tag them. So now it's all context that we can use to massage that. Yep, totally. You're picking up what I'm laying down. So yeah, short term, like 2-3 months out, same thing. Short term, 2 years out, same thing. Just dollar cost average, and it doesn't matter which direction it goes, you'll be fine. You know, when it came right down to it, the only reason why I missed out on that extra, you know, here's where I sold, and I bought in here. Yeah, I dollar cost averaged it down to here. So it even, when it was up here, I was like, yeah, I could come back. Look, Wyckoff, yay! Because we don't count the banker's candle, right? Dip. So I didn't. I could have. I could have got this extra 29%. I could have increased the size of my bag by an additional, 43%. I was grateful that I got what I did because It was good. It was still good. But imagine that, eh? 57%. It could have increased the size of that 50% by 50%. Audrey, I see you there. There you are. Added you. Dwindling. Look at how it just like rode that it just rode that trend line and now it's just dribbling like a basketball.
Like that banker's candle was pretty much indicative of where it was going
Yes.
after that point, right? Okay, sort of like what you showed in silver with that gap in there between Friday and Sunday or Sunday night.
Yep. Yep. XRP also just bouncing more so on this line than anywhere else for since December of 2024. And I remember thinking to myself when this big rush happened, I was like, okay, don't buy, don't buy, don't buy. And then when it bounced here, I was like, ooh, I remember that price back in 2021. That'll probably be support. Yeah, volatility. Volatility. What is the saying? When it comes to volatility, here's your rule of thumb. It is always better to be outside of the market wishing you were in than inside the market wishing you were out. But the volatility is where the money's made. Beautiful volatility. Bit tensor also dribbling like a basketball. Ooh, look at that. I see another pattern. So we've it's like the inner pivot point of the trend line. Same thing here. So when I see this kind of thing, I'm like, yeah, we'll probably come back and test this again. Definitely, we're already testing 220. Polygon showing that life. This was a pretty good little injection of life. That was 8 days, 66%. Dollar cost average. This is where it would be like, okay, so that was actually a recovery because that's the previous high that it beat that it came back to. So this retracement coming back up, that recovery, beautiful. Dollar cost average, especially once you see you're dropping below. Let's go to the 2 hour chart so we can see a little bit more definition here. You can see where
There's
to
an
start.
ABC there, right?
Yep, you saw exactly ABC, and then we have an ABC, and we came back down. This is my indication. Yep, definitely coming back down that sharply. It's time to start buying because it didn't even come close back up here. I would probably already start because I could look back on this. This is the 2 hour chart, and I can see definition back here, right? So that's a pivot point. Once you cross that, yep, start dollar cost averaging. The deeper the retracement, the potential of the retracement from this level here, again, looking at the definition, it's the volume of movement around these pivot points. This here, crucial spot. And it lost. So you want to have that extra bit. You want to have that extra bit waiting because this is a big area. If it can't keep support on that, it's going to definitely go down to the next major resistance or major pivot point. There it is. Lots of points. So then this would be where I would stop dollar cost averaging. I would start again if we drop below this mini pivot point here. Now, as you guys are listening to me, you can probably see why it is that I like naked charts. This is called naked chart trading. I don't mind pivot lines because that helps me in quickly typing in when it's time to make trades. But I prefer this because I find that when there are all kinds of lines on the chart, I actually miss things like this. That crosshair is as simple as I need. Crosshair, price line, price action. That's all anybody really needs because everything else, it's just to share the idea. All the lines and Fibonacci's and all that stuff, that's just to share an idea with someone else. But here, I can see the patterns way easier on that naked chart. Super. What is this? All-time lows? No. But definitely the highs of 2023. Deep into this. Look at recovery. Recovery. What is recovery from here, anyways? 1,000%. When I was doing analysis in 2024, looking at the value of these and the amount of injection that we anticipate coming in over the next 2-3 years, at this point, I was saying, you know what, these things are going to go 15x when it's all said and done. 15x from here. What's that? Well, that's $15. Because that's a dollar right there in this area. $15. So this 10,000% that it is, remember, I told you, most of the money is made in recovery. So now it's like just coming back to recovery is the 10x. I'm saying it's gonna go 15x, $15. So where is that? Well, let's do this again. Because it's alt season and all. Still have to do it. It's a logarithmic chart, isn't it? It better be. Oh no, it got switched. That's the problem. All right. There.
What's significant about that coin?
Oh, Superverse is a gaming coin where they have developers from all parts of the world and they all collaborate on games. And Superverse is a token that they can use to trade monetary value between the games. Just like, how we do with exchanges going to the airport.
Sure.
The video game multiverse is the exchange for all of these different in-game currencies. Oh, I got this cool vest for my avatar on this video game where I hang out with a bunch of people for about 3 months and then I switch to a different video game. Isn't that cool? Wow, you spent your money on that? Yep, sure did. And there's a coin for it. So from here, going to $15, that's an 82x. Oh, and Maureen just made it in. Hi.
Hi. Late, but still present.
Good to have you. It is great to have you. We were just talking about this is Superverse, a metaverse gaming coin. Because, people have to buy their special vests for their video game avatars. So this coin here is to facilitate that. And we were just talking about this one here, based on the amount of money that's in there right now and the amount of money that we're expecting to come in over the next couple of years, we can extrapolate what that market value would be, and it would be approximately $15. So that's a
What? How do you figure
82x.
that? How do you
Well,
figure the
again,
$15?
because when I did this analysis of the gaming industry, when I was looking at okay, this is a good question. Let's go through that. So in CoinMarketCap, I can look up the Superverse, and what I do is that I look at its positioning, 241, and
Yeah.
I look at let's go and zoom out a little bit. Here we go. And I look at other coins that are in the same kind of market cap. It takes a while to go through this, but I'm going to show you where I get the data. So I look at other coins that are within this space, and I'm seeing, okay, if we know that we expect in cryptos, we can expect $5 to $7 trillion coming into cryptos within the next couple of years. Well, that brings up all of the ships, right? Higher tides brings up all the boats type thing. Well, this is then we can figure what kind of market capitalization this will have after that flood comes in and gets distributed in these ratios. So we can say when it's at $1, like I did in the summer of 2024, I was like, this thing's at $1 right now. Based on what's happening, it could very well go down, but when the money comes in, when this reset is under full throttle, this one will probably increase by about 15x. Now, again, that's based on that $5 to $7 trillion estimation. There are analysts that are saying, no, we're going to be closer to the range of probably 15 to 20 trillion. And the reason they have that argument, and I do believe that that has credence, is simply because of the volume of real world assets that are being tokenized by the BlackRocks and Vanguards. The amount is so, like real estate. Did you know that you can go, and they went ahead and did this because we did it in 2022. I say us crazy people in blockchain, created a video game where you can purchase plots of land within this metaverse. It's a digital real estate. It doesn't move. It's static. There's only so much land, so it's a limited amount. It's got the good old scarcity in there. You can go ahead and buy a plot of that land or multiple plots of the land. Each parcel of land is an NFT. So you just buy. But that NFT is what? It's a token to what? A contract. So now you have an identifier of a contract, and now all of the revenue that goes in and out of that property, in and out of that title, is on that ledger for that contract. Ooh. You can do that? Yes. And then BlackRock and all of them, they just did the same thing that our governments have been doing with the same. Like, think about it. What is a border? Someone went like this on a piece of paper and said, there's the line. And then they said, everything that happens here has to happen within this jurisdiction. Why? Because I drew a line. Remember? The piece of paper said the line was right there. And then they issue a currency. Well, everybody is just doing it. Video game producers are just going ahead and being like, okay, well, since we got these alternate coins that we can use anywhere, and it'll store value too, by the way, and sometimes it's really volatile, which just kind of makes it fun. But what's interesting is that now I have a savings account that no one can touch. And I can do with it whatever I want, whenever I want, with whoever I want. You are obviously going to attract people who are innovative and figure out ways to create other little metaverses of jurisdiction, over a means of exchange. What did we think was going to happen? To me, I see this all playing out and I'm like, isn't that just kind of a self-evident truth that that's how things would play out? But I struggle with being able to convey what I see. These are all just all of it. Canadian dollar, Swiss franc, US dollar, euro, Japanese yen, Chinese yuan, Vietnamese dong. Doesn't matter. It's just a flurbo. It's a flurbo. Someone said, look, here's an idea. Here's the border. Here's the jurisdiction. These are our community guidelines, which is just fancy words for, like, it's just a new speak for terms and conditions. SPX 6900, I'm going to bring this up because this one is the most, these guys are zealots. That's what I'll call them, zealots. On X today, one of the main influencers that I find it's got the most accuracy, looks at things with the most grounded perspective, and he also recognizes that it's going to be communities that actually end up building this next financial system. And so his value system is something that I recognize contributes to the recognition of these trends. He was saying,
what's his name?
His username.
Okay, forget it.
Yeah. I will.
Sorry,
I will
thought
find
you'd. Yep. Okay.
Yeah, you'd think that I could talk up the guy so much that I'd remember his name. I would Mudero? No, Mudero, I think, or something like that. I'll find it. Remind me in Telegram, and I will hunt it down. I make that my
President of Venezuela.
Yeah, that. Yeah, it starts with an M. His username
Okay,
starts with an M.
sorry to interrupt you. Carry on with what you were
good.
saying.
It's all good. The whole community is watching things like Unusual Whales. They're reading Armstrong, who doesn't even like cryptos, and they laugh at him because he's just as oblivious as the next guy. He's a smart guy, but he doesn't understand decentralized property. He still thinks that, the guns and all that stuff, like, while they have the power, they don't have the authority, and the law is on our side. We just got to simply exercise it. So these people, they are now creating memes around the mismanagement of the Fed. So they are literally being witnesses, in a sense, evangelists for their ideologies, for their values, by simply making memes and then attaching the brand SPX 6900 to the meme. And then all people are in the comment section being like, what is this? What is this SPX 6900? And then they start conversations about what their values are. They send them to the website where they can read the white paper. It's a meme coin. It doesn't have any monetary value whatsoever, other than the fact that it's getting attention. And what did I say? All we're chasing when we're bumping up against each other on Schoolhouse Earth here, we are programmed to believe that that attention token known as the dollar is something we're supposed to be seeking, that's we're supposed to be accumulating. Because the fall, the deception is that the fall and deception is that those community standards have force and effect over our relationships. These people are of that mindset, and they just spread the word. Spread the good news, everyone. Look, you can just get this token, and now you can be a part of the conversation with all the rest of us who have these tokens. It's almost as ridiculous as people waving flags and being like, I'm on this side of the border. Oh, it's just funny to watch people play this out. again. They're just now creating their own little attention tokens for all the communities. So, yeah. I don't know if I answered the question all the way. Let's put this up there. There we go. Anything else anybody wants to cover? Anybody got questions?
Yeah, I'm kind of curious. Like right now, I know everything's low. And is this, and why, is this a good time to buy? And why is it a good time to buy? And would Ethereum be, I would like Ethereum to be included in that, even though that's never appealed to me before, but I'd like to have a little bit, all of a sudden it's kind of looming like, oh, maybe this is something that would be important as a gateway.
Oh, yeah. What you're doing with Midnight, Maureen, couldn't come at a more timely time. That it is definitely. I mean, I said it. I said it when the price was high, right? Remember ADA was at like 90 cents, and it was like, "Hey, Dragon Riders, let's watch your money go down for the next 6 months." Right? Like that's exactly how that played out. So the further we go down into this market structure, the higher likelihood we have of a recovery that pays us some really nice dividends. I mean, recovery would double your money right now. That's dollar cost averaging. That is magic.
And what's the wisdom or absence of wisdom of somebody simply taking a lump sum and throwing it in at this point because of where the market is relative to
Oh,
that support? Like you can't go back in history and do dollar cost averaging,
no,
in where you've done it. So you can't go
that's
back.
right.
So let's go forward.
Yep. And here, I have to say, the first thing that you ought to do if you want to go forward with a small amount right here is you're going to need to spend at least an hour a day. And if you want, market analysis can be that for you. And you just follow that's the same mindset. As it retraces, I'm going to increase my position. As it comes back, when it recovers, I sell 50% and appreciate the rest. That's all you do. If you follow that rule, it doesn't matter if it goes up or down, because even if it's, let's say for instance it's wrong, right? You'll know what happens when it comes and breaks market structure. Oh, we're going the other way. So then you just reverse your strategy. You'll have a loss. But if, again, you do that, you'll win 60% of the time simply because you're dollar cost averaging. I've seen people, even when it goes into consolidation, they're like, hey, I'm just going to, when I see 2 points, it is a potential to set two positions. And you just bounce back and forth as it consolidates. We've seen consolidation go for weeks. Well, you're safe. Why? Because if you lose, the next one will probably win. So the timing itself is kind of irrelevant in the sense that as long as you follow that principle, you can take one trade a year or 20 trades a week, you have the highest likelihood of winning.
Paul, remember what you did? You followed it just on paper. And so really we could do that too, say for 3 months. And pretended we did dollar cost averaging or whatever, because to put money sometimes sometimes that's a little bit a bigger step than you want to take. But wouldn't that be a good way to begin? I'm thinking of that, just like, oh, I'm going to just go ahead and do it for 3 months and see what happens. Or I don't know, would you advise that, or what?
Always do it with others. I think one of the things that happen, this is a reason why I think a lot of traders fail, is because they don't socialize. They don't share conversations with others who have traded or had experience or actively doing it. Even if you don't have an expert to hang out with, at least find a way to. I'm not saying I'm an expert by any stretch, but you want, even if you're not following like a guru, right? Someone who has a course or they've got their own community, still find other people who are having conversations about it and jam that language. The more that you do that, what's going to happen is that the timing, like what you were saying, you feel like it's important that there's timing to this. Yes, absolutely. The reason why you feel that, my dear, is because you've been a part of the conversation now for a year. That's why you're feeling that. That is good. Don't ever make a choice based off of it. But the fact that you're experiencing it at the price action in the market structure that you're experiencing it means that you've been paying attention. And you can never go wrong by dollar cost averaging.
I really like the familiarity. It feels like there's some ground beneath my feet, even it's the language, and I am starting to navigate. I'm going to say that. Even though it can be clumsy, I still can navigate. And I'm having like inner urges to like, oh, why don't I just try to go on Gemini and just see what's going on?
Yeah.
And you'd have that urge. So, it's slow coming, but still, I have all the time in the world.
And Maureen, think of it this way. The conversation you and I had on yesterday, yeah, that, like if we shared those language patterns, first of all, I don't think you would have had them, but that if we had that conversation a year ago, it would not have had anywhere close to the impact that it did yesterday. And that's simply because this is a language. Even reading the markets is another form of language. I just want to share you with one more recovery. Remember, we've got the ABCD that we're in right now. I'll close with this. We got the ABCD that we're in right now, and then we got that little tiny mini one that we talked about earlier. Zooming in, you can see ABC, and there's a potential D coming up. And I said, if you go from here, whatever you put in, coming to recovery, and this is where I would sell. I would sell at about $1.07 US. That is a double. You're 192%. You're basically 200%. You're doubling your money, whatever you put in right now. Just coming back to the recovery on the daily chart. But we're not here for the daily chart either. It's wonderful to make those little micro movements throughout. But remember, let's go to the weekly chart. This is a whole different game. This is A. This is B. This is currently C, 21 cents. We want to recover here. This is recovery. So whatever we put in, that's a 7x to recovery on the weekly chart. And that's how I'm going to close. And appreciate the rest.
Cool. So you would
Everybody
take that,
happened.
you would ride that up to it's 700% and then sell 50% at that point and let it continue on?
Yeah, I'd let the rest continue. Again, that's if I wanted to. Okay, So now we talk about another thing. I've got an account that I'm playing with. That one there, if I blow the whole thing, I'm fine with it. But I'm not closing anything out until when we're all done. Like it's all of it I'm going to risk. And I'm just going to ride it past to Valhalla if necessary. I'm letting that one go and I'll sell that account. I'll start selling that at $8
At
US.
what?
$8 US.
Okay.
Different exit strategy, different strategy altogether. That's my high risk swinging for the fences account. But maybe that's 10% of everything that I invest.
Sure.
Yeah. If that one takes off, if that one does well, that one's going to be a good, I'd say, yeah, well, that would be a life-changing money if it goes to $8 and I start selling. Then I will definitely be buying land.
Well, where it's at now to $8 is 2,100%.
Mm-hmm.
For me, you know, what complicates all of that buying and selling is tax consequences. So
Oh, pesky things.
I I need to feel that's the area, the unexplored area for me of like, oh my God, am I going to have to keep track of all of that? And you know, especially now before I'm not real solid, but I am getting more solid in the kingdom, the queendom.
Think of it this way. Think of it this way. That's the key. That's the key.
I know it is the key.
Because the question that you need to ask yourself, and this is a good one to prompt yourself every once in a while as a friendly reminder, you only have to pay tax if it returns to the form that's taxable.
Yeah, that's still like going like this. It's
Ian,
have a real reality yet. We'll see.
I'd be curious, Ian.
Go ahead.
I'd be curious, Ian, if you could share what your thoughts are on that in response. Your angle. What's your perspective?
Well, I don't pay attention to any of that because I haven't filed a tax return for 20 years.
Right.
So, plus, looking at what Paul just said, you have to look at the identity of the thing that is being taxed. Okay. Mm-hmm. First of all, it is you as a quote taxpayer. I mean, there's plenty of players out there who say that the whole IRS here in the United States, so the whole IRS thing is smoke and mirrors and always has been, and 99.9% of Americans have been duped into thinking it's the real deal when it's not. So I don't know much about that at all. So I'm just making commentary on what I've heard other people say, including former IRS agents, interestingly. So getting back to, we each have a capacity, multiple capacity. You have the ability to play a role. And I have a friend, I had a friend up here in Canada who sold a company to a U.S. Business, which turned around and sued him. But it was because he knew what role he was playing when he was playing it that determined that the case went in his favor. So in one case, he was playing the CEO, and in the other case, he was playing the shareholder, the sole shareholder of the company. Two different legal roles, okay? And so as soon as the judge heard him describe how he signed the documents, and the two roles were played within minutes of each other. As soon as the judge heard how he had completed that process, he stopped the case and ruled in my friend's favor. We've got two federal government ministers equal to your cabinet ministers under Trump, for instance, who were both playing multiple roles in their position as cabinet members. And to specifically distinguish them one from the other, and both of them said, or one of them specifically said, the two parts of my mind can communicate perfectly. Knowing that what he was talking about was legal jargon for when I'm acting in this role, it has nothing to do with what I'm acting in this role. So you have to look at also the thing of that the currency. Your cryptocurrency is not taxed until it's returned to US dollars. Unless, and I actually mean US dollar, not USDC or USDT, but US dollars. And
trade isn't taxed then. So if I trade from my wallet,
That's right.
then it's not taxed, even though it could be documented like, oh, you left this and all
Oh,
that.
if you want
Yeah,
to report
it's all-
all of that, you're welcome to do so. But they still can't tax it until it's back in the United States, in their control, in the account that they host for your benefit within their system. That's the only
Now, that's
time they
my
can tax it.
understanding of it. You would have to
Yep.
feel comfortable with that.
It always boils down to identity. How is it that you're identifying yourself? And Maureen, you are definitely practicing that language. You're there.
Yeah.
You are not in America very often anymore. In fact, when you are, it's only for a millisecond as the transaction goes through.
This is what it now is on our tax forms. Have you bought any cryptocurrency?
Yeah.
Finally. So I can say legitimately no, because my trust has or something. I don't know.
Yes, exactly. Now you're
Well,
getting
there's also other things that now does it ask at the end of your tax return for you to certify that what you stated is
Oh,
correct
right.
and true?
Yes. Yeah. No, it doesn't. It doesn't. That's what the IRS does. I get that. That
Okay.
you don't claim that this is the absolute truth as it is until
Okay.
IRS audits you. So I do
Okay.
have
Well,
that.
the next question has to do with your birth date. Is that on there?
No. Not that I'm aware of.
Okay. So what your social security number is.
My social security number is my identifier.
Okay. Okay. Yeah, I was gonna dive into the birthday thing. You know, most people
Yeah.
are asked, "What's your birthday?" and you say, "This is my birthday." Well, and my question is, well, how do you know? Well, because my parents told me. Oh, that's hearsay. That's third-party information. Well, because the government said, well, that's third-party information. The fact is, even though you were there, you have no firsthand knowledge to determine what your birth date is. So that's another factor in the equation.
Yeah.
Because whenever you're asked to testify, you can only testify to what you know firsthand.
I get that.
And your birth date is known to you by hearsay. So I actually say to people when they ask me, "What's your birth date?" I say, "Well, I'm told that it's this date, but I don't know. Even though I was there, I didn't have the capacity to know."
That's a good way to say it too, because then you're consistent. You're consistent in what you're saying. So it becomes like, okay, this is my fact. This is a fact for me. This is helpful.
And it also contributes to that identifier, right?
Right.
Your birth date is the identification, is the parameter of when that account was opened. Not when were you born. That's what that's signifying. Yes, when you're born gets written down, but the identification has its own creation date, and that's what's being used to identify you.
Like
I can feel the door opening to this. You know what I'm saying? In
Yeah.
the sense, oh, so I'm sure more information like this will come to me, and I do need to be with others who have done this.
Well, here's another little tidbit.
Go ahead. I'm sorry.
Another little tidbit is this: from the Christian perspective, we believe that life begins at the moment of conception. In particular, in the Orthodox tradition, they actually believe that the birth date is the moment of conception. Now, how will they know that? Well, they just base that on, approximate time. Okay, but in the Orthodox tradition, it is that. My brother is an Orthodox believer, and him and his wife had a miscarriage. Boy, that word took a while to get to my head. Had a miscarriage, and they actually had a ceremony for the child, and the birth date was the moment they thought was approximately the moment of conception. So, and that flies in the face of anything government, because they don't like looking at it that way. They look at it from the moment you are birthed. Berberth. Yeah.
Which by that definition, the wording is that means to be allotted anchoring ground is what birth means. To be allotted anchoring ground.
Interesting. I didn't know that.
Oh, Maureen, you're chatting there. It looks like you're muted though.
I just say that feels like that's what happens as you're birthed into this country. You're given a number, and this is where you belong, and this is who you are, and we own you, and kind of that.
Oh, Maureen, have you ever looked up the word family?
Right, we did that together.
Did we? Yeah.
Yeah. Yes. We
Yeah.
did.
Yeah. Yeah. That's your allotted. That's another allotted identifier, right?
Right. Like clan or something, the clan that you're in. I remember us doing that. How different.
Let's also think from the perspective of the anchor, that they could tie an anchor around your leg, throw you overboard, and consider you birthed. Even though the rope may not be long enough to keep your head above water, you're birthed. And that's what, of course, they did to slaves, hundreds of years ago.
We just had, in our community, we just had a significant impact of a death of a woman. Her name was Awotundi. Judy was her American name, and Awotundi was her African name. I think that's right. I'm not sure because I never asked her. And she was quite a phenomenon. I was talking to Paul about that. She had a big impact. She was taught at the university level and was, I think, a Fulbright scholar. Africa and the U.S., the University of Massachusetts and Amherst. She was very well educated as a black woman. No, I didn't. They're in there. Ron wondered if I ate all the eggs. So no, he's in a little whirlwind of what am I going to have for breakfast?
There's no eggs here.
Where did I put them? There they are, over there.
Oh,
You were right by his frying pan. Oh well. that speaks to all of that, doesn't it? It's like wrapped in this cloud of unknowing, where am I? Who am I?
I don't know shit.
So anyway, I just want to bring that up in the sense that the impact was about that aloneness, that we are born alone and we die alone. And that was what Ron and I discussed this morning, was this sense of aloneness and how important. And I guess that I don't know how that ties in, but it's like, you belong to a country. Wait a minute. No, you are alone. You have singularity. What's the other word? The S word. This is too loud.
Sovereignty.
Sovereignty. That's the word. Sovereignty. Just, I wonder what the definition of that. One without a second. I don't know. That you are one whole, all complete by yourself. I don't know. It just brings that up to me, and the shock.
I consider the definition to be similar to, or with, if I could put a language to it, it's the awareness of your consciousness. Your ability to choose. If you have an awareness of your ability to choose, I say that you're sovereign.
That's also another word that's coming up very
to the degree that you practice it.
Yeah, this choose versus I want or I need, which comes from a very different place. So all these things are emerging. They're rising to the surface of the water.
Mm-hmm.
Anyway, I think Audrey wants to say something, or she's talking. She's talking on the phone.
She's chatting on the phone. Yeah.
Oh, okay.
All right. That's it for today, folks.
Thank you
so much.
Very much for that. Thank you. That was
wonderful.
Yeah. Take care. See you
Have a
tomorrow.
good day.
Oh, I don't know.
Blessing to you. Bye. Bye-bye.
Bye.